Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry, and thanks for listening. Check out the Mortgage Voice podcast on Apple Podcasts, Google Music Play, and wherever fine podcasts are heard. Subscribe for free, never miss an episode, and please leave a review. It helps other people find the show. We're also on YouTube at Jeff Barton, the Mortgage Voice. Subscribe to the channel, click on the bell to get notified whenever a new episode appears, and check us out on our website, www. Was that 4 W's? How many W's did I give there?
3.
Okay, that's enough. .themortgagevoice.com. Thanks again for listening. I do appreciate it. I always tag this with our great radio stations, KCAA, KMET, and K-Tahoe, our aired broadcasts throughout the week, certainly on the weekends, and we do appreciate people who listen. Spring buying season is coming around the corner. There's a lot of indications that the market interest rates are going to remain low, probably through the election, unless there's something to do with the coronavirus. You know, Daryl, let me ask you a question. Do you remember last year what affected rates, what we were talking about externally, not just the financials themselves? It wasn't the coronavirus. It was something like wildfires or was it?
Wildfires, floods, famine.
Yeah, every year for some reason. And
Locusts.
I don't know what. Yeah, yes, exactly. They're swooping in. Something affects the sentiment of people who write these articles. And I don't know if it really affects the mortgage interest rates, but it's always a caveat when they talk about what the rates are. Yes, but they could be affected by X. Is it, new regulation by the CFPB? Is it bank regulators? Is it like the coronavirus?
North Korea.
No, yes, I think that was last year, North Korea, and certainly the trade embargo, or not the embargo, but the trade war that was going on between China and the U.S. That was one of the big ones last year. Now, of course, it's nobody even pays attention to it, but the trade war is still there. The Phase 1 agreement that they had signed recently at the White House between Xi's lieutenant and President Trump was really addressing, right? It really wasn't much of an agreement at all when there are many, many different aspects of a trade agreement. And again, I think Brexit was one of them one time, right?
Huge.
A couple of years ago. It was huge. Right, and that seems to be a non-issue now.
Yeah, but it's voted in. It's going to happen now.
It's voted. It's voted in.
Yeah.
This guy Boris Johnson, the Trump of England, I guess is what they call him, right? Anyway, a lot of things happen to distract people from what really is happening, and so let me just tell you, the mortgage interest rates are as low as they've ever been, almost. And when I say almost, I mean back to 2016, a little bit in the first quarter of 2016, when we were getting into the high twos in terms of a 30-year fixed-rate loan. Certainly with your ARM products, you can get there, and I think with your FHA deals, although you have MIP, you certainly are hovering around 3 to 3.25%. These are outstanding rates. I'll get into the specifics later on in the show, but now is the time. If there is a time, if there ever is a time, now is the time. Reading a couple articles through the Mortgage News Daily recently talking about the type of buyers there are out there, the people who are in the market, people who are looking for housing, the millennial group, the group right after them, I believe is Gen X, Gen Y.
We had the list out.
Yeah. I know, and every week I do this, and I apologize. If you're out there and laughing at me, I do understand it. But one of those the next generation after the millennials, yes, this group, as well as the millennials, represents the largest buying group in the marketplace. So if you're of this group and you're waiting for the right time, well, now is the right time. We've seen wages increase in the last year, albeit not as fast as some would like. And obviously, the inventory is not going to be more plentiful. It's going to be less plentiful. The reason being, of course, you've got low interest rates, and you have a market that is only going up 2 to 3% a year, which is sustainable. It's not the 10 to 15% that it was back in, right before the Great Recession. So, and by the way, that's what they're calling it now.
The what?
The Great Recession.
Really?
Yes.
The other one wasn't so bad now.
No. They were calling it the mortgage meltdown.
Oh, okay.
But now they're calling it the Great Recession, not the Great Depression, which is
I
something
got it.
different.
Now I understand.
Now it's very clear. It's
If you
very
talk a little
clear.
slower, I pick up on it.
Well, the thing that I like about the Great Recession is it takes the onus of responsibility away from my profession.
Right.
Because I think unfairly so, and again, this is a plug for people who do what I do, the mortgage broker, in particular the lending industry in general, was blamed for, what happened with the Great Recession.
With the Great Recession. Rates hit the bottom, and they're not going to stay on the bottom,
No, they're not.
but they have for an inordinate amount of time. So, gambling of what the rate's going to be tomorrow, the next day, or next week, or next year it's going to be more.
Well, I believe anything under 4%, and you're crazy not to refi if you did a house at 4.5%, right? I mean, come on. 0.5% over 30 years is tens and thousands of dollars. So why would you want to just spend that money and give it to the bank? It's just silly. Or if you're sitting anywhere in the 5% range and you can refinance in the threes, low threes, you could do a 15-year particular loan and probably pay very similar to what you're paying currently at 5%. So you're done with the loan, 15 years sooner than you would have been had you remained in your other loan. I mean, there are so many good reasons to get out there and refinance. And this isn't, you don't have to come to me, although I would love you to come to me. Again, Jeff Barton, the Mortgage Voice. We're here each and every week on all these fine stations. And as we mentioned on the podcast and YouTube, you can talk to me if you go to the website, malibufunding.net. And you can go to the loan officers page. There's 40, 50 loan officers in there you can talk to from my company. But talk to any company, and they'll tell you the same thing. These rates are unbelievable. And if the browbeating that the Fed chair has taken from the president, that's Jerome Powell, and the president being Donald Trump, you will know that the browbeating will continue in order to maintain the momentum of what they consider the Trump recovery or the Trump whatever it is, because having interest rates, and that's the Fed rate, which don't be confused with the mortgage interest rate, but there is a bit of a relationship between the two. In order to keep lending rates low, the president constantly berates this guy, even though he chose him to be his guy, and that has really added pressure to not only the Fed chair's job, all the other particular Fed chairs. And by the way, there's a couple of seats open. And if you want to know more about it, go to any search engine and look up the Fed governor, not the Fed governor, the Fed Board of Governors. You will see there's 9 of them. Each one of these people have long history in economics, and most of them come from a particular school of economics. There is a current Fed chair, I want to say it's Philadelphia, that is trying to be approved, and it's a Senate approval, and I think it's a lifetime job. I'm not sure, but anyway, this particular person is all about supply side, is all about making interest rates as cheap as possible to keep the flow of money really cheap to allow businesses to borrow and grow the economy. This is Trump's economic philosophy, although I don't know if it's necessarily a philosophy, but this is what he's been doing to the Fed chair in order to keep the particular spigot, the faucet, open. Now, the downside, all the money we've talked about, but for you, the consumer who's out there today, mortgage interest rates are great. And so don't be silly and wait any longer. I think for all of the people who are, invested in the market right now, they're happy. They're happy. Why? Because the interest rates are low and properties still haven't been rising as fast as they might. Now, we are Malibu Funding, this company that sponsors the show, is in, they lend in 10 different states. In each state, there are pockets of great opportunity. I will give you out in the Inland Empire. We know San Bernardino and Riverside have really risen in value to whereby there are very few pockets underwater anymore. However, if you go up to 15 or if you go way out on the 10, any of these Hemet, Hesperia, Salton Sea, A lot of these areas that got whacked so big time during the Great Recession that they thought they'd never come back. But the opportunities in buying and renting out in those particular areas are still there. And I think you can even come closer, but you got to search. So find a great realtor. Certainly we're a great lender, but we can also, and you'll hear on the show, a lot of great lenders come on the show and talk about exactly what they're able to give you. Anyway, I'm Jeff Barton. Thanks for tuning in. Thanks for listening each and every week. And we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Hi, and welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening. Check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play, wherever podcasts are heard. And they're all over the Big Eight. We're all on all of them. What are some of the other ones, Daryl?
Spreaker, iTunes.
Yep, Google.
Yeah.
Okay, so we are on, like I say, a lot of podcasts. It's great. I love being on the podcast because I join a huge array of other people in our industry doing it, and only people who have a certain grade and quality of show can actually be on these things. So I really appreciate those particular podcasts for allowing me to be on. Leave us a review, helps others find the show. We're also on YouTube. Everybody knows my YouTube channel, Jeff Barton, The Mortgage Voice. Go there, subscribe, hit the bell. The bell will tell you when new shows appear on YouTube, and it will ring and let you know whenever a new episode is available. Check us out. Our website also is www.mortgagevoice.com. Again, thanks for listening to the show. Couple things. Very interesting article I read today, and I happen to agree with it. We talk on the show about the lending industry in general with lending people who have been in the industry for a long time, whether they're lenders, whether they're processors, whether they're real estate agents, brokers, whether they're investors, whether they're warehouse lenders, all kinds of people in the industry talking about automation. It really killed the valuation services model, right? The AVMs that are out there, which is the appraisal services that are used by all investors, all lenders, but they've homogenized the actual job. And what happens is the end person who does the job gets screwed because they don't get paid the same anymore. So what is happening in the loan industry in terms of automation? If there was a person out there, and we've talked about it, who could wave a magic wand and get rid of the loan officer, they would do it and make themselves a fortune in the process by showing everybody the software that would make the loan application from soup to nuts available online, only online, and that you could get your approval through this magic process. And so the article that I read today, which talked about that, was interesting. So I'm going to read some excerpts. I know, reading on radio, that is stellar performance. However, I'm going to do it anyway. Okay. The age-old question is, will a machine replace me? Me being the loan officer, the person who now talks to the customer and arranges financing through the lender. Will they replace me? It's the fear in my industry. And again, 1 in 9 people work in the real estate-related industries, so this affects a lot of people. So the article says many of the Silicon Valley startups that splash the Wall Street Journal headlines believe that loan officers, processors, underwriters will disappear. And what do they point to? They point to a company like SoFi. That's the company that's advertised, how you can refi your student debt and go with SoFi, and you do it all online or on your phone. You basically are transferring the balance from the institution, whoever it is, that got you that loan to begin with, and you transfer it over to SoFi. They pay off the original note, just like it would be in a mortgage, right? Except they give you a much lower interest rate. Now, that is done without a representative. That's done by you on your phone, your laptop, your device, whatever it is. And that is the model by which people are pointing to and saying, we could do that with housing. We could do that with refinances. We could do that with mortgages. So this is what we deal with. This is what the model is, and that the people, the eggheads, yes, that's right, the nerds, they're all out there trying to figure out the best way to put me out of business. So obviously, it's not making me happy. However, this particular article said there are a couple things about that. One, and and Wells Fargo tried it. They invested $500 million to find this solution. And we all know about Rocket Mortgage with Quicken Loans. We all know that they spent probably over $1 billion trying to get this process to whereby a buyer or person who refis just goes online, does all the work themselves, and then that happens. Their refi or their purchase mortgage happens. 73% of the home buyers surveyed by Wells Fargo after the investment preferred that they speak with a human being while they go through the process, meaning that there is no replacement for a human being to human being contact, even in an area like mortgages or refinances, purchases or refinances. Now, why is that? Why do you think that people want to talk to people? A person wants to talk to another person rather than just, you would think, because of the age of technology that we're in, that most of the people in this generation that is the millennials or whatever the one after that is, I don't really know what it is. It's either X or Y, like the chromosome. So why? Even these people want to talk to another human being. And they came up with 3 different ways by which technology can aid in terms of the job that is part and parcel to what the loan process is. So I'm going to tell you what these 3 things are. How do you like that? You want to know? All right, I'll tell you. Here are the 3 things. Okay, very good. Number 1, digitizing documentation at the point of origination. Now, what does that mean? Okay, so you're with a loan officer and you want to be able to do a loan. The information that you have as the borrower in your head or as W-2s or whatever you document your income or your credit score, however it is, that has to be digitized from the moment the interview takes place, and that can happen. Now, how can that happen? You allow the customer access to the origination process in order to provide the documentation and provide the information on the loan application, commonly called the 1003. That is happening. Malibu Funding and many companies are going to mobile origination applications. What does that mean? That means on my cell phone, I can get you started on your loan. All the information that needs to be input can be done either scanned by the phone or typed in by the phone or whatever it is, or your laptop or whatever mobile device you have. These mobile technologies are allowing origination and the information needed to put on the 1003 or the loan application to start at the origination meeting. Now, let's say you don't meet. You can still do it by a login password application that is on all these mobile applications. That's one, how automation will help. 2, automating error-prone manual tasks. What does that mean? Input should be automated. A lot of the things, like if you want to know what the neighborhood's like or your neighbor's house sold for back in 2004, there are a lot of title companies that have this information automatically. If you're in the industry, you can get a hold of it. You can search things. It's tremendous. That particular information automatically input into the loan application eliminates human error of being able to having to do it yourself. Those integration softwares are available and are tools that the loan originator will use to make the process better, easier, faster, and with less errors. Number 3, centralizing communication. Now, I hate the word communication because I'm not really sure what it means to everybody. I know what it means to me, but I don't know what it means to you, the customer. So, given the fact that there are so many different cultures, customs, way that things are shared back and forth, outlining in a simple form, in a way by which is easy to understand by both the borrower and all of the other services and loan officer, real estate agent in the process, is what I would consider open communication, i.e., everybody gets to see what everybody else is doing, unless, of course, there's need for privacy, which is a totally different conversation. But in order to streamline all of these processes, the automated software that's allowing the integration of the communication is available today. It just depends on the company you're working for and working with. But all of these augment the human-to-human contract. And that's what this article is saying is the future for what is happening in the loan business. It's not going to be an automated mess where you have to fend for yourself. It's going to be empowering, and I hate that word too, the loan officer to be able to communicate and give you the best possible service with the most up-to-date technology-driven solutions. You like that? Thank you very much. I'm Jeff Barton. I'm your voice, mortgage industry. Be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening. Hey, check out the Mortgage Voice podcast on Apple Podcasts and Google Music Player. Wherever fine podcasts are heard, subscribe for free. Never miss an episode. Please leave us a review. It helps other people find the show. We're also on YouTube at Jeff Barton, the Mortgage Voice. Subscribe to the channel. Click the bell to get notified whenever a new episode is available, and check us out on our website, www.themortgagevoice.com. We're also on KCAA, KMET, and K-Tahoe, 3 great radio stations, and soon to be, and hopefully soon, coming to the Las Vegas market. We are constantly expanding what we do on the show, and we thank you for listening. I wanted to have our next guest on the show because there's some exciting and different things happening in the reverse mortgage field, and Nina Penny is our resident expert, also one of the country's foremost experts in HECM reverse mortgages. Nina, welcome back to the show.
Thanks for having me, Jeff.
Thank you, too. How are things going? You good?
Things are going great. Thanks, Jeff, for asking. Yeah, things are going really well. There's
Great.
some new news, exciting news, and some just news to know.
Okay, excellent. Let's go with the exciting news first.
Well, some of the exciting news is that right now there's a lot of lenders out there, like Finance of America and other companies, who are coming out with new products that fit homes that have a high value up to $4 million.
Okay.
Those programs are growing and with popularity and getting better with different features. So we're very excited about that news.
Okay, excellent. Now, what are some of the other news? Some people getting in, getting out of the reverse mortgage field?
Yes, well, Quicken was actually in the reverse mortgage field. They had a company called One Reverse.
Okay.
And they were out doing reverse mortgages. They were offering their folks, if you went to Quicken for a loan and you were 62 and older, they automatically gave you a proposal for reverse mortgage as an option. However, the word came out today that they are discontinuing that section of their business, going to focus now more on forward or traditional loans.
I see. Can I ask you a question?
See them go, but it happens.
Yeah, I know, and I agree. I like Quicken Loans. I think they do a good job. But when companies like that decide to get in, get out, we in the industry all go, why? How does this happen? Why does it happen? What are your thoughts on that?
I think that, well, we have to look at the number of reverse mortgages that are actually done, by the course of the year. Now, granted, there's a lot of misconceptions out there about the product.
Right.
And a lot of people are very hesitant to even, with an open mind, learn about them. So, you know what, the numbers of reverse mortgages probably are not as great as you would imagine they are.
Mm-hmm.
And so we have a lot of players out there that offer their product. There's at least 5 or 6 lenders out there who do reverse mortgages. And so the volume of loans, it's not enough for anyone to be a top producer.
I see.
Top producing company. So, it's normal that, you'll see some maybe fall out.
Just because it's too expensive to keep the product available? Is that what you're trying to say?
Well, I just don't think there's enough business around for
Right.
5 or 6 lenders on reverse mortgages.
Right.
I mean, for the number of people that do them, right now, it's not like traditional loans, it's a smaller demographic.
You know,
When you have 5 or 6 people all fighting for the business, the
Yeah.
one way that you try and get it is maybe you cut down your margins to nothing. So maybe they weren't really making a lot of money.
Yeah, years ago, I think we did as a company 15 mortgages, reverse mortgages 1 year. And for those of you that don't know, FHA has a thing called FHA Connection where you can go to Neighborhood Watch and see how you're doing in comparison to other lenders. And, if I was in the top 100, I was like, what? 15 gets me in the top 100? I was shocked.
Yes. hmm If you look at the top 100 people that do loans every month, you'll see sometimes, some companies do 10.
Right.
On the retail side, you'll see, the big players,
Right.
but the amount of money that they spend in advertising, that's the rough one.
Yeah, exactly right. Okay, so let's get to the rumor mill. What's happening in the rumor mill? You had mentioned something to me off air a little bit, and I'd like you to share what is coming down the pike in terms of either reverse products or any kind of refinance or purchases in the reverse field. What's happening? Do you know?
So right now, purchase business, reversal purchase is a great product.
Yep.
And if you're thinking about buying a home and you're 62 and older and you have a contribution of about 50%, you should look at an option of a reverse mortgage.
Right.
There is, we are anticipating within the next 60 to 90 days that they will no longer be able to do a HECM-to-HECM refinance, which means that if you have a reverse mortgage right now, and you have a lot of equity now built up in your house and thinking about doing a reverse mortgage to tap into it, that option will be going away. So if you're thinking that might be a good fit for you, you might want to get started on that sooner rather than later.
I see. So, and again, for people who don't know, products come and go with FHA, don't they? I mean, this is not an unusual circumstance for a product line to go away, and it may come back, it may not. They may have a different kind come later, right? Isn't that what it does all the time with FHA?
Sure. And the thing is that, this is not, it's not like it's devastating news because overall, the percentage of HECM-to-HECM refinances is pretty small. There's not millions, thousands and thousands being done every year. It's relatively small. But for the folks that have a reverse mortgage now and do have great equity built up again and think that they may want to refinance and get some cash out, it would be probably in your best interest to start that sooner.
Yeah, I think that's right, and that's a great heads up on the rumor that might be happening. And you're saying there's some guidance coming out on that maybe in the future?
Yeah, I think HUD will be releasing that probably within 120 days, probably 60 to 90 days. We'll hear.
Okay, very good. No, that's a great heads up for people who are out there who obviously have money that they've accrued by their, people get a reverse mortgage and they still got 50%. Well, what if now have 70%? Well, you want to tap into that money, but you're not going to be able to do it after a while if this rumor is true. It's a good thing to get on it now. I agree with that.
Yeah, I would definitely. Yeah, chances are it is coming. We're pretty confident in that. So
I see.
If that's you, and you know that you look at your reverse statement and you're seeing that your value is really up there and you have a lot more equity in there, and it could be a possibility, and you'd like to entertain that, I would suggest really doing it.
Nina, what is the average age of the person who does a reverse? I've always wanted to ask you, and I never really remembered until we got off air, and I went, I forgot to ask her. But I know that you're eligible at 62 and a half. What is the average age of the people that do these? Is it in their 60s, or is it in the later years?
No, I really see a lot of people, because a lot of people look at reverse mortgage as a financial tool for when they're going to retire to eliminate a mortgage.
Right.
A lot of them are in the early to mid 60s. When they want to eliminate a mortgage payment, because as we've talked about before, Jeff, when you retire, you're not going to get any more money coming in.
Right.
The only thing you can do to get more cash in your pocket is by eliminating debt. And so a mortgage payment is the biggest debt you can eliminate.
Right.
And reverse mortgage will allow you to, put yourself into a loan where you're not obligated to make a payment, but you can if you want to, and just keep up with your taxes and insurance.
Yeah, no,
so
I think,
would say the 60s.
Right. No, I was saying that the retirement strategy of being able to either eliminate debt or take money out and invest it in something else so that you can make money rather than have it sit in your house.
Mm-hmm. Or just have it as a safety net. We all need a safety net, right, Jeff?
Right. No, absolutely. The older you get. Nina, we're up against it. Shout out your phone number or a way by people can get in touch with you, the expert in our reverse mortgages here at Malibu Funding.
Sure. My number is 480-635-2410. That's the best number to reach me.
And what's your NMLS number, just curiously?
168272.
Excellent. Thank you very much, Nina, for coming on the show. Always appreciate it. And this was very last minute. Appreciate it.
It was. No problem, Jeff. Have a great day.
And you have a great day, too. I'm Jeff Barton, your voice in the mortgage industry. We'll be
You're
right
listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening to the show. You can check us out, our Mortgage Voice podcast on Apple Podcasts, Google Music Play, wherever fine podcasts are heard. Subscribe for free and never miss an episode. Yay! And please, hey, leave us a review. It helps everybody else find the show. It really does. We're also on YouTube, Jeff Barton, The Mortgage Voice. And if you go to The Mortgage Voice, make sure you click on subscribe and then click the bell to get notified whenever a new episode is available. Check us out on our website as well, www.themortgagevoice.com. We are also on KCAA, KMET, and K-Tahoe, 3 great radio stations that we've been on for 5 years. You can go to their website and see this show videoed with me talking to you. Hello. And then, you can also see it on YouTube. So we appreciate you listening, really do. With us today is our first time on the air with us is Cindy Bui, who is a terrific loan officer, nice person, and has a lot of experience. And I wanted to get her on the show. Cindy, first of all, how are you?
Hi, I'm good. Thank you.
Thank you.
Yourself?
Oh, not bad. I know that your experience is large. You were a processor, loan officer for a long time. Can you just tell people who you work for, what type of clients you might like or get that you do work with?
Well, right now, my main clientele, I would say, is primarily in the Los Angeles area as well as Nevada area. A lot of them are first time buyers or people who are just still newer and just starting to do their first refinancing. Those are my clients.
We earlier in a segment we were talking about how the death of the loan officer has been predicted, right, and that automation is going to take over. You're talking to new first-time home buyers. Do you think that's ever going to happen? Don't they really need a person like you to walk them through the process?
I feel like because they have a lot of questions,
right.
And they just think, we do this every day, and so it's kind of cookbook for us. But then as I talk to people who are in a totally different field, doing other things other than mortgages and real estate, they have no idea of the process.
Right.
And so I notice that I'm talking to them as if this is like their first time ever dealing with this type of information, and they definitely need all that because, for example, once they get the loan estimate, it can get intimidating to them if they don't understand what prepaids and all that stuff is.
Right.
So I learned that, especially prepaids, collecting for escrows, for taxes and insurance. I explain to them what that is because a lot of times they get scared when they see that amount.
Right,
and
I
think it's really good. Mm-hmm.
No, I agree with you 100%. I think that most of what happens in the loan estimate all the way through to the closing documents is a mystery. And at the end of the day, having someone to walk through it with them, somebody that they can trust, somebody that can explain it to them, that's never going to go away.
Yes, I agree. I don't think that can be replaced with automated.
No, and because you have such a large knowledge base of the industry and how long you've been in the industry, you can't replace that with a computer program. You just can't do it.
No, you can't. Especially with this type of having a house is one of the largest assets biggest financial decision in a person's life. So definitely they would like to talk to a live person who can give them information.
The customers that you deal with, new time or first time home buyers, are they using FHA products? Are they using down payment assistance, or are they 20% down, 750 FICO score, cookie cutter type loans? What are kind of the loans that you're dealing with now?
I'm doing a lot of FHAs, and then a lot of conventionals as well. Some 5% down, or some 20%.
Right.
And a lot of them are W-2 wage earners, but I do have some self-employed. So a lot of them, to me, they seem pretty simple.
Right.
Ones, especially with FHA, and especially if they're wage earners, they just seem to flow very, very fast.
Yes, I agree with that. I think that the loans out there, and especially with us, we've seen a lot of growth in that non-QM sector. But listening to you, it sounds like a lot of your customers may be standard or traditional type borrowers.
The ones that I have, yes. My clientele is that. It depends. Some of them in Los Angeles, I do have some self-employed clients, like Schedule C clients, and those, yeah. Mm-hmm.
And do you see that the loans for those type of borrowers are in the non-QM space, or are they still conventional?
For me, they've been. I've had a small percentage. My clientele, the small percentage is non-QM, and a lot of them, they just fall into the regular conventional, just a 1-year tax return requirement. Right. So, yes.
Okay, so, and go on, I'm sorry.
No, I was going to say, the ones that do fall into non-QM, I've been finding good loans for them as well.
Okay, excellent. Describe one loan product for me that you happen to like right now.
The ones that I happen to like are just the traditional, conventional loans.
Yeah, the cookie. No, I understand why, because they're the easier ones to do. No, I do.
Yeah, and the VAs, because the rates are really low.
Right. What are the rates today? I don't even know.
I think for VA is like either 2.99 or 2.875.
Yeah, it's really amazing. Though that's an unbelievable rate, to be honest with you. I mean,
yeah, and it's like that for FHA too, so it's really low.
I saw that. I saw it today, actually, the FHA, VA, even some of the reverse products, pretty low rates. I mean, and you can't get lower rates. And given that, are you doing more refis or purchases in your business?
Right now, I'm doing a lot of refinances.
Right. And these people that bought
just because the rates are really low right now.
Right. And are these people that have purchased, in the distant past or over the past 2 or 3 years when rates were inching up to 5%?
I'm trying to think. It's mixed.
It is.
A lot of them is mixed. Yeah. Mm-hmm.
Hey, tell us who you work for. The company you work for. Give us a little bit of information on you, maybe a way for people to contact you in case they want a terrific loan officer to talk to.
Who do I work for? I work with you.
Exactly. There you go. That's a selfless plug right there. But how do they get in touch with you, Cindy? Yeah.
How do they get in touch with me? They can email me, or they can call me on my cell phone. My email is 888-homelending@gmail.com. And my phone number is 310-403-7400.
Okay, excellent. Do you have a website or anything like that?
I have one. No, I have one for my purchases. But as far as refinance, I'm just one of the things I'm working on trying to do right now.
Excellent. Growth of the business. Where do you see it more this year? Do you see it still refi heavy?
As of right now, I do. I mean, I don't follow the market too much.
Right.
I just see, what's going on a daily, but so far it seems like the rates are just staying pretty low right now. So it's, for all the others who haven't refinanced right now, it's still, this is like the best time.
Right. Okay. So
I don't think the rates are going to get any lower.
No. Where could they go? I mean, somebody has to make $1 or $2. I mean, that's what I think a lot of borrowers never really get. They don't understand that unless the bank is making, or whoever is making you the loan is making money, there is no opportunity for you to borrow. So you have to build something in for those people.
Yes.
Yeah, exactly. Okay, so the real estate market. You like dealing with real estate agents?
Do I like? Yes, I do.
Good.
I guess throughout the years I've learned ways to work with them, harmoniously.
Okay.
So overall, yes.
No, it's funny. I was decrying the entire real estate industry, although I'm a real estate broker as well. And when you're talking to real estate agents, what are some of the things that you can help them calm down about when they're trying to get all the information they want about the loan that you're trying to get them?
Trying to have them calm down.
Yeah, meaning that, a lot of seller real estate agents are really desperate to know every second what happens with the loan. And so how do you handle that?
How do I handle that? I give them, I let them know, I guess I basically let them know what I submitted, when I submitted it, and what the turn time is. And that's basically it, I guess.
No, I think that's really the only thing you can do and the best thing to do. Yeah. Hey, Cindy, we're up against the clock. That was a great interview. Thank you very much for coming on the show.
Okay, you're welcome.
Thank you very much.
Me.
Yeah, no problem. That's Cindy Bui, Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you for listening. Check out the Mortgage Voice podcast on Apple Podcasts and Google Music Play, wherever fine podcasts are heard. Subscribe for free. Never miss an episode. And please leave us a review. It helps other people find the show. We're also on YouTube, as you know, Jeff Barton, the Mortgage Voice. And if you go there, subscribe to the channel and click the bell to get notified whenever a new episode is available. And check us out on our website, too, www.mortgagevoice.com. We're on several radio stations. We're all over the Inland Empire. We're certainly up in the Lake Tahoe and soon coming to Las Vegas, Nevada. So the show's growing. Our audience is always really loyal. I appreciate the following. And again, thanks for listening with us today. On the show, once again, is another new participant, a guy who is doing some loans with Malibu, but also has his own terrific business, Manny Solana. And Manny, how are you from California Home? What is it? California Home Solutions, correct?
You got that right. California Home Solution.
Excellent. Give us an idea where that is and a little bit about the company when you started it.
Well, my offices are in Woodland Hills. I started the company probably 20 years ago, and we have all types of products and have certainly serviced my base, which used to be with credit unions when I first started out.
I see.
Yeah.
That's interesting. What do you see as the change over the last 20 years in terms of the customers? Not necessarily the products, us, but the customers. Have they changed much over that time?
Well, since the way you could get a loan in the past, not too long ago, 2006, 2007, before the bubble, the customer didn't really make much of a difference other than having a credit score. As you know,
right.
The criteria back then was credit score, and that was the main criteria. Now you have the ability to repay being the priority,
right.
Getting a good loan, and then your reserves, number two, and then third credit. So that's where people get eligible for different programs that are out there on that priority basis.
When you talk to your clients, what are some of the challenges that they have in those three areas? Is it credit? Is it ability to repay? Or is it something else?
Actually, it's all. And with regards to credit, we like to work with people's credit and start with them early on because there is a benefit as you get your credit score higher as to how your pricing will improve and your interest rates will go down. The other issue is the majority, well, not say the majority, but over 50% of the clients I have are self-employed. And self-employed individuals tackle problems that the salaried individual doesn't as to determining the income that is qualifying for their loan.
when you qualifying people on their income, and you mentioned non-traditional type people who make money, are you finding that the conventional product doesn't satisfy and you have to go to what they call the non-QM products, or how are you satisfying those people?
Absolutely. Right now, non-QM, which are loans that don't conform to what our normal Fannie Mae, Freddie Mac standards, are extremely popular and sought after. Why? Because on self-employed individuals, sometimes their tax return, which is used for conforming purposes, doesn't give them the reality of the income that they are earning. So they have to resort to other programs that are non-QM and calculate their income on another basis.
Yeah, and the way you speak of it is exactly right. I mean, the way that you look at income and how you have to explain it to the borrower is exactly what you just did in terms of explaining it to the listening audience. In the interview process, you're sitting down with somebody, they're explaining to you the different ways with which they earn a living. How is it that you can say, hey, you don't qualify for the best rate, but you qualify for this rate? And how does that go down with the client when they're not necessarily, agreeing or understanding?
Well, I think that the starting point is that, as you know, and what we do as brokers and bankers,
right,
is that we take the individual's information, which means give me all your tools. Fortunately for myself, I come from a CPA background, so when it comes to taking somebody's tax return apart, I can understand it very quickly and see what the options are. So your primary best rates would be if I can use the tax return. So you add back certain things that may not be depreciation, et cetera, to increase the income. But then in some instances, you have your sub-S corporations, your C corporations, and some items are being paid off through the corporation, so they shouldn't be deducted and ding you for that as well. You start off with the bank, with the tax returns, and see what is the best that you can do with that. Then if the tax returns are not going to give you the debt-to-income ratio, which means that your income, your debts have to be, let's say, within 45% or less of what your income is, then you have to go to another source or another program. Some of the programs that are out there are bank statement programs where you take 12 months of your last bank statements, business and or personal, and create a worksheet with the deposits that are on there, netting out transfers, etc., and saying, now, that's the reality of the flow of the income and cash that went through your business, even though the tax return doesn't reflect it. So if we take this and use this for your income as a better means to give you more income, your interest rate, instead of being, let's say, 3.75, might jump to 4.5. It's not the worst of all worlds. Now you can afford to buy the darn house. Then later on you can get yourself qualified for a low interest rate. But 4.5% isn't the end of the world either.
No, I remember telling people, especially in my audience, 875 was the first loan I ever got back in, I forget when it was, and I was happy to get it, believe me. I mean, I think I borrowed $100,000 and had a $400,000 mortgage, and like I say, I was very happy to get it, and since then, of course, is a long time ago.
Yeah.
So let me ask you one other question. Your business, your locations, how do people best get in touch with you if they need a terrific loan officer with a lot of great knowledge and experience?
Well, what they can easily do is just Google me or Yelp me as California Home Solution or Manny Solana, California Home Solution in Woodland Hills. And the first thing that they're going to see, which I'm very proud of, is the 5-star rating. And they will get a means to be able to reach me through that. And certainly it's easy to find me. I've been around for 20 years and haven't been hiding.
No,
so,
me either.
Yeah.
That's very good.
And another thing that's very important nowadays that's being overlooked is the reverse mortgages.
Right.
There are so many let's just say, misnomers on what a reverse mortgage is all about. And I have consistently saved people from situations, from people that are not able to get by on a monthly basis just on their Social Security and disability.
Right.
And yet they have $500,000 in wealth. They're wealthy people, but they don't know they're wealthy people because they can't access the equity in their home. That's a situation. There's even jumbo reverses where people have got $5 million homes that have chosen this particular product because if they take any money out of their investment accounts, they're socked with a heavy penalty, and this is a refinance for free. So lots of purposes for a reverse that people are overlooking.
I agree with you. I love the reverse product for certain borrowers, especially retired people who, like you say, they're property rich but cash poor.
Yeah.
Yeah. It's really good. Manny, thanks for coming on the show. I really appreciate it. Your wealth of experience, newfound broker in my life, and I do appreciate it. Thank you very much.
I look forward to the relationship, Jeff. You're a great guy.
Thank you, Manny. Thanks very much. I'm Jeff Barton, your voice in the mortgage industry. This has been Manny Solana from California Home Solutions, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.